So what we've decided to do to save ourselves time, you could see everyone's names on the screen. We're not going to waste our time on the intro. We really want to get into this panel straight on. So critical minerals are generally accepted as non-fuel minerals vital for economic growth, national security, serving essential functions, facing high demand, and vulnerable supply chains due to geopolitics, resource scarcity, and or regional concentration. While there's been a tendency to focus on the energy transition, the key features of what most people will agree for the qualifications as a critical mineral would be: one, serving critical roles or essentially functions with no easy substitute; two, having supply chain vulnerability; three, having economic and security importance. Now, silver has suddenly been acknowledged as a critical mineral by governments, industry, and the market. Now, that Cinderella metal didn't consult any committee when she became the belle of the ball. So, is gold critical for Africa's economy? And if we dare venture a little deeper, should Africa consider gold a critical mineral? Is Africa going to be one that announces to the world via its golden economic transformation that gold is critical? What we really want today, we want the audience today to be the jury. So we're going to have some kind of active at the end, we're making a case. Hopefully we make a good case and you'll be the judge. So you're going to weigh and you'll be the jury and tell us, you weigh the gold, the sand on the scales and give us your final verdict. So that's how this panel is going to go. So, Ishmael, we are starting with you first. First of all, I really want to congratulate the Ghana Gold Board and Ghana for showing Africa in the last year that bold, decisive moves can quickly transform our national fortunes. Ghana has an incredible transformation story of how gold took the Ghanaian cedi from one of the worst performing currencies to one of the best in a few years. Please share with us how the Ghana Gold Board was critical to this transformation and what else we can expect from the Gold Board this year.
All right, thank you very much. Good afternoon to us all, and welcome to this panel. I will begin by saying that the question is pregnant for a young institution like Gold Board to answer. But I think our experiences are clear enough to share. So from our experience for the past few months, let me be quick to say Gold Board came to existence last year, April, through the Gold Board Act 1140, 2025. The first statement I want us to take notice is that we have demonstrated that gold is transformational when we decide to manage it as a national strategic asset, not just as a sporting commodity. That is what Ghana Gold Board has demonstrated. So before the existence of Gold Board, Ghana was was experiencing some structural weaknesses. And I believe most of the gold-producing countries in Africa are going through the same. So Gold Board came in to address these challenges, but I will speak a bit about these challenges. So first on my list is fragmented gold trading market, particularly for the ASM sector. And so what Gold Board did was that we tried to reorganize that to ensure we get maximum benefit from the ASM sector. And it will be interesting to note that last year, by the end of the year, within 6-7 months, we were able to export more than 100 tons of gold from this ASM sector alone. That was unprecedented for our country. And the value in terms of dollars was more than $10 billion into our economy. That is foreign exchange. So the second challenge that Gold Board tried to address was a massive foreign exchange losses through either offshore trading, pricing, smuggling, so informal export. So Gold Board came in to structure that. And the other one was that there was a weak linkage between the gold we are producing and then our microeconomy. the macro economy. So we looked at these three things, and then our government of the day decided to bring in a system, a governance structure that will address these challenges to ensure Ghana benefits from that. So the Gold Board, what it does is that we provide centralized aggregation system. But the key thing here is that in as much we centralize at the top, beneath that we have decentralized our supply chain. And we also tend to improve traceability structures. And again, the third point we did was that we try to intentionally link our gold production to our forest exchange supply and gold reserve accumulation. So that is what Gold Board did. So if today we talk about our currency being one of the best performing currency, I must indicate that it was not accidental. It was structural system or policy that was put in place. And the other different thing was that this policy execution, we did that at top speed and decisiveness. We didn't wait for a perfect situation before. We said, look, the country is struggling economically. What do we do? This is the model. Let's pilot it. If it works, fine. If it doesn't, we change the way and make it better. So in terms, and it reflects in our city stabilization. So if you look at our city stabilization, in terms of reflection, you will look at our FX increase. Our gold reserves have also increased. We have also increased the confidence of investors in our economy at large. We have reduced speculation also in our system. So it is clear that Gold Board has come and helped the country at large. Now, what to expect from Gold Board going forward? We want to deepen this strategy. It has worked in the short term. We believe that is a good model that we could scale. So going forward, we're going to scale it. The other thing is that we're also going to deepen our formalization structure in terms of introducing a digital or blockchain-backed traceability system. So easily, each and everyone could trace it. And the other thing we're also going to do is now integrate more stronger ESG standards. So now Gold Board has an ESG strategy, and that is going to spill over to all the supply chain, everyone within the supply chain. So in summary, what we want to say is that the Gold Board story of Ghana is clear, that Africa may not need to discover new minerals. However, with good governance and structures, the ones we have, we can manage it to transform our economies. Thank you.
Thank you for that. So Itai, we're going to come over to Zimbabwe, and I love how he ended about good governance and structure. So speaking of structure, I remember the Zimbabwe, maybe it's 3 years now, Zimbabwe structured a new currency. It's called the ZiG for stability. But the world said it wouldn't work. I remember then there was like the ZiG news or speculation was in maybe like every other week and then a few months. But we noticed the world has gone quiet now on the ZiG. But between local and international speculation, please share the journey and the impact of gold and the ZiG on Zimbabwe's economy.
Okay, thank you very much, Nere. Perhaps before I take you through Zimbabwe's journey with the new Zimbabwe gold currency, which I shall refer as the ZiG, I think it's important to note that we got there because we had gone through a period of hyperinflation, which resulted in the abandonment of the use of the local currency around 2009, early 2009. And so we totally dollarized around 2009. But you see, with dollarization comes loss of monetary sovereignty. So your authorities who are used to using monetary authority to manage the economy lose a part of that sovereignty, because all of a sudden you can't print local currency to support government expenditure and things like that. So around 2019, the authorities thought they need to bring back part of that monetary sovereignty, and so allowed for a regime where the Zimbabwe dollar or local currency could coexist with the US dollar. That's after a decade of total dollarization. You see, when people have gone through such a rough patch and then there is stability, then you seek to introduce that which they associate with hyperinflation. It's always problematic. So the authorities struggled to get the market to gain confidence. And so the local currency came through 2019, and then around end of 2019, there was an attempt to totally do away with dollarization. As we got into COVID, we were now in an exclusive local currency mode. But as a COVID intervention, the authorities brought back the US dollar so that it coexists with local currency. Local currency did not do well until April 2024, when the ZIG was introduced. I think the thinking there was, let's support our local currency with something. Let's not just make it fiat. You know, there's got to be something supporting the currency. So in April 2024, the central bank introduced the Zimbabwe gold currency, which was backed or supported by a portfolio of mineral reserves as well as US dollar cash reserves. So the predominant asset in that portfolio, which I would call the hedging portfolio, was gold. Now, as we introduced this, or as the central bank introduced this, the opening exchange rate was something like 13.6 ZIG per US dollar, right? But because there wasn't enough foreign currency in the market to deal with everyone's requirements, the parallel market came in, or the black market came in to provide that which the formal banking system couldn't, and it did so at a premium. And I think while we were at 13.6 official, the black market was around 18.5, right? Which was a 36% premium. So right at inception, April 2024, 13.6 opening exchange rate, but you've got a premium of about 36% to the parallel market. 5 months down the line, that premium widened to about 70%, while the exchange rate, the official exchange rate, was pretty much flat, right? But the parallel rate widened, right? And during that time, gold actually appreciated some 8.5% between April 2024 and September 2024. So you see a disconnect. If gold is supporting your exchange rate and it's appreciating on the international markets, you'd expect your currency to appreciate in sympathy. But so there was this disconnect. So that caused the authorities to implement a devaluation around September 2024, which they coupled with some tight monetary policies. They increased the bank policy rate, tightened government spending amongst a raft of other measures. So what we've seen since September 2024 to January 2026, I think over a 17-month period, is that there's been stability in the ZIG. In fact, the official exchange rate, the ZIG exchange rate, has just moved maybe 2%. It has depreciated 2%, but the parallel rate has actually appreciated about 5%, which means that that margin has actually been narrowed from the 70% we saw initially. I think it's now down to about 20 to 23%. But what has happened to the gold price between September 2024 and January 2025? It's moved from about 2,600 per ounce to about $5,280 per ounce. So the gold price has doubled. Now, you would expect that if we were hedging our ZiG predominantly with US dollar, and with gold, and gold prices doubled, you'd expect an appreciation of about 50% in your currency. But because gold is not the only hedging instrument there, so you'd expect, say, 30 to 40% appreciation. So while we have had stability and no movement in the ZiG in the last 17 months, that's not enough, because we should actually have appreciated the currency. So the question is, why has that disconnect happened? And personally, I attribute that to what I call the snake bite effect. Just like I said, when you've gone through a period of hyperinflation, you need a lot of time to convince your consumers to have confidence. So even though you've done the right things and you now support I think it's going to be long before people who were used to hyperinflation, if anything, the informal sector, which now accounts for 70 to 80% of our market, is a market which was used to procuring its foreign currency requirements from the power market, and not catered for through the formal banking system. That market, as they sell their goods and services, demand exclusively US dollars, because they don't want to struggle. They can't get that from the official market. So in some cases, never mind stability in ZiG, we've seen resistance by the informal sector, which has become a dominant player in the market, to accept local currency. So the question is, what are the takeaways from Zimbabwe's ZiG journey? I think the observation that protracted periods of hyperinflation remove confidence and trust, and therefore it probably requires a little bit more time for central banks to benefit from structures where they back their currencies with gold and other commodities, because of the behavioral issues and confidence issues. So I think that's been Zimbabwe's journey with the ZiG.
Oh, thank you for that. That was very candid. So, Estelle, I don't know if you're able to just, I guess, an opinion, chip in on this, because we're kind of, this is a debate. You've heard, I was really taken aback by what Itai said. So we've heard Ghana's story. We've heard Zimbabwe's story. These are two economies really powered by gold. Well, I'm saying that. They're not saying it, but I'm listening to the experience. And in one case, I guess the people had confidence. In the other one, they didn't. But it seems like Itai is saying, I think, that if the people had trusted the right decision of the government, the economy, the currency, a lot would be in better shape. Is that really just it? What's your opinion on this? I'm giving you a curveball question. So before we come to your question, I'm curious, what are your thoughts on this? Sure. It's too deep to let go.
Actually, I think what both Ghana and Zimbabwe show is that when a government is intentional about the gold opportunity and meaningfully harnesses that by putting in place the right structures, by responding to market jitters around hyperinflation or informality, with that intention, gold can be critical for an economy, because gold becomes a turnkey to drive investor confidence, to drive economic development. I'm thinking of a country where we have clients just now, Mali, and where there is a challenge in its gold sector, a few challenges, but one of them is that the government doesn't really have a framework for driving the sustainable development of its artisanal small-scale mining sector of gold. And that's a very significant part of their economy. But the lack of appetite and political will to really make the most of that sector, to really take meaningful control formally through interventions that drive good governance, that drive engagement by responsible actors, leaves the participants of that sector vulnerable, and they aren't getting as much out of it as they could be. If I may add one thought in relation to that, it's that when you have governments being intentional about supporting their ASM gold sectors, as Ghana has done, the government becomes a business partner as well as a regulator. Now, in a way that may present a conflict, but that can be managed. But what it means is the government now has more than just a political interest in enfranchising that community of miners and traders. It has a business-based interest to work as partners to support their professionalization, to support their access to responsible capital, to support their introduction of cleaner technologies, and to avoid waste. Because if the government is now going to directly benefit from that gold and stabilize its currency through it, then the government wants to make sure that for every dollar that's invested in the ASM sector to get that gold out, we're not seeing high percentages of it being left as waste because of inefficient production systems. So it changes the political economy around who takes an interest in the artisan small-scale sector, and it opens up the possibility for partnership-based development of the sector rather than abandonment to work with actors who aren't really interested in supporting the people and are just interested in extracting the wealth out into their own jurisdictions, or who may take advantage of the informality of the ASM sector to launder money from adjacent illicit activities.
Thank you for that. So we are already kind of going into the next question, the question I actually really had for you.
Sure.
So we've been really talking about, I guess, macroeconomic things, and you already started going into, the artisanal, the small-scale mining. But, Estelle, what I love about you is you've worked extensively in Africa for more than 2 decades. I didn't even know this until earlier, but you even do some work with the G7. But in general, your work is really going towards optimizing for sustainability in the sector and supply chains. But you've heard all our inputs, and like I said, you were able to talk on the macro level. But what's your take on the micro? Is there something we're missing in this whole discussion? And I also want you to tie 2 questions in for time. Could you also, from there, just bring us some more into the artisanal and small-scale mining? It has a significant footprint in Africa's economies. You already started talking about Mali and what they're not optimizing, but this is really Ghana's strength. So I know you can handle this. I've merged 2 questions.
Sure.
So tell me what we're missing, and really if you could go into the micro of this discussion.
When you look at the scale of production of gold from the artisan small-scale mining sector, in Africa, it's mind-boggling. It's about 560 tons per annum, based on a rapid internet search I did this morning. And that's approximately $27 billion. Actually, 10 years ago, I remember doing a training on ASM, and at the time, global gold production was worth 18 billion. So if you look at just how the gold price has created so much greater value and opportunity within Africa, within ASM, it is tremendously exciting, and it feels neglectful when political leaders are not being intentional about grabbing that opportunity. The reason the micro level really matters to me, and it's not to disregard the importance of the macro, because currency stabilization is one of the most important things I think a nation can do with its gold in order to drive investment more widely into the economy and to drive trade. But we have worked in very many communities in artisan small-scale mining, not just in gold, in Africa, also in emeralds and tin and cobalt, copper, a range of materials. And what you see is at the micro level, at the individual level and the household level, especially in gold, gold is uniquely important in building individual and household resilience. So as a woman, I think about the domestic economy of my home. I have my little family P&L and balance sheet because I'm a businesswoman, and we work very hard as a family to try and build financial security. And, within my family, we have some investments in these markets. We have another property. We've diversified, but my core income is from advisory through 11 sources. When I move into artisan small-scale mining communities and I interview people who are artisan small-scale miners or traders, very rarely is that all that they're doing at the individual level. And very rarely is that all that they're doing at the household level. And their gold provides them with the cash they need to cross-invest into other pieces of the economy. So actually, in markets where access to cash is constrained or working capital is constrained for your farming business or your trading business, where there's gold, wow, it provides this wonderful step towards strengthening other pieces of the economy. And that's not very visible if you don't sit there and talk to households about why are they mining gold and how are they using it. I think the other aspect, besides that kind of microeconomic benefit for cross-sectoral investment, and I'm quite embarrassed, I just told you my personal investment strategy. If there's any advisors out there that want to help me improve it, I'm all ears. I'm clearly a geographer and not an investor. But it's the female thing, the women's thing. I'm an advisor to the G7 on gender equality, and Lebanon Sources is a feminist organization, which means that we care about equity and we care about empowering women, because we recognize that women, not just that we are held back from realizing our full potential because of structural discrimination and barriers, but economies are underserved because of that. Because where women cannot fully participate, where they cannot bring their best to the table, that's value that is lost. So I really feel that the artisanal small-scale mining sector, which in Africa, 50% of those miners are women, it provides such an important opportunity for women's economic empowerment at the individual and household level, but at the community level as well. And that is something to be enfranchised and harnessed. Yet, there are numerous studies that show that at the microeconomic level, women remain marginalized from the most productive roles, from the greatest opportunities. And so there is more work to be done there.
Thank you. That was awesome. So now I'm back to you, Ishmael and Itai. You both have the same questions. Something else we haven't talked about on this whole critical mineral consideration is national security. If you could tell me, for both your countries, starting with you, Ishmael, if you can shed light, what is the impact of gold on the national security of Ghana or consideration, same with Zimbabwe? And as you answer that, I'm just going to tie it into your next question too. Would you say gold is critical? So you've already said what you said earlier. We're going to talk now about national security. So as you talk about national security, is gold critical for Ghana's economy? We're going towards trying to sort of wrap up. And then for you, the same, Itai, for Zim. But Ishmael, you go first.
All right. Thank you very much. Is gold critical to Ghana's economy? Absolutely, yes. And I'm sure my previous comment demonstrates that, but I'll go further on that. Shipping 100 tons of gold from ASM within a period of 7 months, earning foreign exchange $10 billion, more than $10 billion, from just one aspect of mining. We have not talked about the taxes. We've not talked about the royalties and some of the local community development levies that we get from that. Does it make it critical to our society? Yes. Again, we haven't talked about the employment. When you look at the ASM sector in Ghana now, it's been estimated that we have more than 1 million people directly and indirectly involved in the sector. And assuming these 1 million people have dependents, so let's assume dependency ratio of 1:4, which means that about 5 million people completely depends on this sector. So what gold does for us is that it offers employment and a source of livelihood. Again, I've mentioned about the foreign exchange aspect of it. When you have your foreign exchange goes up with there, what you also get is currency stability. And the CD stabilization we've gotten over the period, we cannot deny the fact that it is backed by gold. And so it also means that if you look at our physical and monetary aspect, it plays a relevant role. So now when I step back to the definition of critical minerals you gave, that one, it should be strategically essential and economically important. It should have a bit of vulnerability in terms of supply chain, and it should be difficult to substitute. For us, if I sit here today, I can confidently tell you that if you look at the benefit I have narrated, we can't take gold out of our economy. So to us, gold absolutely is critical to our economy. Now, in terms of national security issues, today, I think the previous panel they mentioned about security that goes beyond just the armies and the guns that we have. It is about economic security. When your economy is struggling, it's triple to your political and your social insecurity, and you don't want to go into that angle. So for us, we are treating gold as a national security asset, not just any asset. Because if the economy is not doing well, political and social insecurity comes in, people will take to the streets. And we know what happens. When the uprising in other countries happen, we know what happened. And again, we also understand that minerals have been a source of conflict in some of our African countries. And therefore, in our security architecture, mining or gold plays a critical role there. So in terms of community sustainability, it needs to be there, because if the communities are not doing well, they also start agitating, and it goes to the entire continent. Again, what we also do is that because of good governance, it means there won't be much smuggling, which goes to fund illicit activities. And you know, when you have a lot of illicit activities, you lose control. If they could bring in guns and other stuff, you lose control. So it means that it should be a national strategy and a national asset, which will prevent these illicit flows in our borders, and therefore we have control over it. Overall, for us, in our security architecture, gold is very critical. Lastly, when we go into, it's been shown that even in some of the small-scale mining areas, ASM areas, you find a lot of proliferation of gangs in these areas. Assuming we don't manage it and it spills over, it becomes something else. So gold is not only macroeconomic stabilizer for our country, but it is also a national security asset and strategy that we manage to ensure that we stay safe.
Thank you. Thank you for that. All right, Itai, you have 5 minutes. And then if we'll see what justice, I know you could do some justice to this.
Okay, thanks, Nera. So I associate myself with what my colleague Ishmael has said about how strategic gold is. While it may not be considered a critical mineral within the context of the definition that you gave, but it's of such strategic importance to our economies that it becomes critical to our economies. I hope the distinction there is clear. And to show how gold is of such strategic importance to ZIM, I'll just run through a few statistics observed in the last 10 years, from 2016 to 25. Looking at output itself, we have increased from 23.2 tons to 49.5 tons, which is 2.1 times in 10 years. Gold royalties as a percentage of total government revenues, they've moved up from 0.34% to about 4.4%, which is 13 times up in the last decade. Gold output as a percentage of GDP, 4.7% a decade ago to 8.6% now, which is about double. Formal gold jobs, jobs in the formal sector outside the ASM sector, 18,000 in 2016, 31,000 2025, which is 1.7 times up. In the ASM sector, 750,000 jobs in 2016 to 1.8 million in 2025, 2.4 times up. Gold employment as a percentage of mining employment. So how much people are employed in the gold sector relative to the entire mining sector? 15.4% a decade ago and 57% now. That's 3.7 times up. Gold exports as a percentage of total mineral export revenues, 58.5% now, up from 39.1%, 1.5 times up. So you can see all those statistics point to how much more strategic gold has actually become to Zimbabwe in the last decade. So there is no question or doubt about how critical it is to our economy. Now, talking about national security, if you look at like what Ishmael said, you want more employment in your economy so that, you have less despondent youths who can cause security problems to the government. If you look at the growth in the SM space, the 2.4 times growth from 750,000 to 1.8 million, and the positive downstream effects created by those jobs, through consumption and savings, speaks to, how that becomes a source of national security. If you look at the currency stability itself, like I said, yes, we haven't enjoyed the full benefit of hedging, but there is a semblance of stability, and that stability is important to national security. So the gold revenues, mainly driven, the export revenues mainly driven by gold exports, will tend to support investment in defense and other security structures by our government, which reinforces the extent to which gold is both strategic and, how it impacts national security in our country. Thank you.
Thank you. So I'm going to do my wrap up because pretty much Estelle will have the last word, and then you're going to vote. The good thing about this panel, I've learned so much. I've been getting lost and almost forgetting my job as a moderator because I love data. However, we've really focused on 2 countries in Africa. But look, we know there's 54 countries in Africa. At least 38 of these 54 countries in Africa are gold producing. There's a lot happening in Mali, Burkina, Egypt, DRC, Tanzania. We don't have enough time to go through all of this, but that's Africa. However, honestly, the truth is, beyond Africa, I'm really wondering, why don't we even talk about, is gold critical for the global economy? It's almost like there's an elephant in the room that no one wants to talk about, like we mentioned with silver. So if we look at, Estelle, the last question for you, and then we'll have the vote. Is there a reason why we don't think deeper or want to go there? Is gold really critical for the global economy? And if you look at what gold is doing for the global markets, Africa is struggling. And I feel like a lot of times we are underserved in discussing artisanal issues and the things we're struggling with. But on the bigger picture, what's gold doing for the global economy? And should gold even be really a critical mineral for the global economy? And then when we're done, Estelle will ask for the vote. Thanks,
Kian. So I would say it is. Gold is a safe haven. It's a financial instrument. It's one of the things that makes it unique amongst the world of minerals that we produce here in Africa. I think in a global climate that is increasingly conflicted, that is increasingly competitive, where multilateralism, I wouldn't say it's failing, but it's certainly being reconfigured, and not everybody is bought into it in the way that they were. We're moving from unipolar to multipolar politics, and gold is important to everyone, no matter where your political affiliation sits across the various blocks. All of them are investing in gold production, gold procurement, and gold storage. And I think the price of gold alone shows us that clearly it's critical to the global economy. I want to make a final point on national security, and I'll turn to people. I think it would be naive for us not to mention that gold isn't entirely beneficial in every way. It clearly is, in my opinion, it's a critical mineral for Africa, it's a critical mineral for the world because of its strategic importance, potential, and what it does deliver. But without that intention, without the right partners, and without distributing the harms and benefits sensibly, we can't really capitalize upon that potential. And I say that, the last point, very, very intentionally, as 11 Sources voice. If you do everything to centralize control of gold, but you don't redistribute the benefits from that greater economic benefit and political power to everyone along the internal gold value chain, you will get greater destabilization and resistance. And there are many, many countries in Africa where we see gold playing an instrumental role in destabilization at the local level. So it's not enough just to invest in the economic aspects, we also have to take a particular political approach. Audience, what do you think? If you think that gold is a critical mineral for Africa's development, please will you put your hands up, and I'm going to try and take a photo of you. Brilliant. I think that's fairly...
And thank you for this. Of course,
Unanimous?
we're very happy that we won. Thank you for attending our panel.